Alright, so this is another weekly review for April, the week of April 22nd through the 26th. What do we know so far about the market? We know that we are in a market profile. So what do we know about market profile so far? We know that we are in a sell program right now because we have changed the state of delivery here. We have a shift of market structure here, right? So we are in a sell program on a weekly. So that's a sell program here. Now we start matching that up with external to internal range liquidity here. So we took external range liquidity. Where can market go? We can go to an internal range liquidity. Do we have an internal range liquidity here? No. Do we have internal range liquidity on daily? Yes, we do. We have internal range liquidity here, right? So after taking the external range liquidity, we can reasonably expect to go to a daily internal range liquidity here. So, and with that in mind, we can start applying the news and the relevant SMT for this type of weekly profile. So let's look at the news. We have a few news that came out this week. The relevant news being we had Tuesday 9:45 news, and then Thursday was the Thursday and Friday was the big news at 8:30, and Friday at 8:30. So with that in mind, we can expect a push up toward that and probably expect some type of reversal from here, right? Because we're in a higher time frame sell program here, and let's see what happens in the in that. So if we're going to be expecting a push up, we would want to see a SMT here on the lows. Right, so looking at going back to the weekly profile here, or the objective here, now let's look at the relevant price action in SMT. So if you look at on a 4-hour chart, you'll see that 4-hour chart we do have an SMT. While it didn't come on Monday, right, we're looking at these lows here from Friday to Monday, right? While these didn't come, Monday didn't give us the SMT, Friday did. Friday, these lows, we have higher lows here, versus in NASDAQ we have lower lows, right? You compare that with YM, we have similar thing happening in YM on Friday. So we have lows here, we have YM, we have higher lows here. So NQ went down at this level here. We had an SMT on Friday. So Monday we did not get SMT. So we had a relevant SMT at a external range liquidity, hinting us that it might go to a daily internal range liquidity here. Okay, so that's how the whole mindset going into the week kind of played out. Now let's look at the seasonality. If you look at whatever seasonality charts that you want to use, I use season X charts, and from May through April, or the indices are bearish, so we would expect some type of bearish movement in May. So we have seasonality lining up with our market profile being in a sell program. So any movement up, we're going to be looking for a manipulation there, which leads us to H4 POIs, right? So a H4 POI, we're looking for two POIs here. We're looking for a POI where price can draw up to, and once price gets there, we can expect another POI on 4-hour chart or so, or daily chart, for price to expand into. So there's two types of POIs there, and then last but not least, we're going to be talking about how I played this, how many trades I took, and why I took those trades. All right, just to elaborate more on this here. So we had a 4-hour, right? We had a change in state of delivery here, so we come back into this internal range liquidity here, right? So if you look at it on a 1-hour chart, 15-minute chart wasn't very clear because we had all this consolidation here. So once there's a consolidation, zoom out to a 1-hour chart. So as you can see, midnight open here, right? And we start, so that's not okay. So we have midnight here open, and then we have New York, London session here. So 4 to 5 here, London session. So this was the key here. We had a change in state of delivery with this candle at 6 o'clock, right? This is pre New York, and then we drop down again into a New York AM session, start rallying up. When did I buy this? So I bought a contract on, I believe it was when we made this high here. So it was a late night on Monday. So I bought a contract on Monday here, expecting market to push up, and this movement here kind of confirmed in my mind that I should hold up until at least till this high, and then ultimately to this high. Alright, so here are the two trades that I took. So once we had a confirmed change in state of delivery here with this candle, I entered around in this drop here somewhere. This is the options contract that I entered. I entered on Monday after this candle close for a Tuesday, and I will explain later videos why I bought it on Monday and not buy it on Tuesday. Okay, so this is the contract that I bought. As you can see, it had the potential to move up 483%, right? For that particular day, I believe that was the movement. But I did not catch the whole movement here with that 400%, right? So the potential is there. So I bought it somewhere around here and I took it up above this high and I sold it this day on Tuesday. Now I bought another put option once we reached that internal range liquidity, and I bought it at this change in state of delivery here on 1 hour chart. So on a daily, this was the next day model that I utilized. We had a daily internal range liquidity. We had a change in state of delivery here with this candle, and I bought it right after this candle closed, and I took position somewhere in this candle here in this fair value gap. So from here to here, there's an internal range fair value gap, and I took profit there. So with this trade, the potential was to get 100% return almost. I think 160 was the high that I saw in this particular contract put option. And maybe I have this two backwards. So this was the put option here. This was the call option here. So yeah, so this was I had it backwards. So as you can see, there's a put option here, right, on that I took right after this candle closed, right, and then there was a call option that I bought here. So that's it for that video. So we went over how, just to recap, how we expected this market to unfold starting from the higher time frame bias here. So we had a higher time frame bias of sell program, and we expected some type of retracement here, right? So after this is just to confirm that from an expansion you can have a retracement, right? From an expansion you can go into consolidation. From an expansion you can have a reversal. But from an expansion you cannot have another expansion. So we had three options going into this week. We could have reversed, we still can, we can retrace, which we did, or we could have consolidated. Once we have that higher time frame bias, we would utilize the news and the relevant price action here on SMT. We expected some type of reversal / retracement, so we expected an SMT on the lows here. We blended that in with the seasonality, and then we ultimately went into H4 POIs.